Hello, 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 and a massive hello to everybody. How we all doing? How's sound, guys? We rocking and rolling? We ready to go? So let's get this party started. Okay, here we are. So 1st of March 2017. No trade calls, no recommendations. Everybody smells for their own stuff. We're here for educational purpose only. Sessions are recorded. You'll get a recording. Actually, again, sorry, it's me going in autopilot. That's for the weekly webinars. But anyway, you get the point. We're here for educational purpose only. We're here just to have a chat among trader as usual, just trying to pay it forward. So where are we? What's going on? And what's happening post-Trump. So here we are, going into an interesting day. We do have an awful lot of data. I think the other thing to keep in mind for the rest of the week that we've got a bunch of GPB data, so that's going to be very, very interesting with a vote today. So all eyes are going to be on that. So that's clearly one of the key things to keep in mind. As far as the broader picture, as far as Trump, nothing much is going on. Just the, it's, I retweeted, somebody tweeted this morning something like "Make America Wait Again." So, that seems to be the name of the game. We're just going to have to be patient. The big thing here seems to be just, the way the FOMC speakers have been talking about, the rate hike. So it looks like they're trying to get the market to price in a rate of a higher percentage chance of a hike in March, which they've done a good job because we're pretty much up there now, right? So March is pretty much live. We'll have to wait and see. I wouldn't be surprised if they disappoint, okay? Now, if there's anything anybody wants to look at or discuss, any chart you want me to review, I'll try and tackle it. Just write it up in the Q&A. If not, I'm just going to try and give a brief outlook of what I think the most interesting things to look at are, okay? Now, I think one of the nice charts, there's two particularly interesting charts we're focused on here, is basically, I think it's quite interesting, is IWM, right? To see still the weakness in small caps, right? And this is going to be very interesting to see after these weekly closes, how we traded yesterday. Can we hold those highs? And if we hold those highs, and these are the signs of the first crack, so basically RSX, IWM, EEM, there's a very nice opportunity here to play these to the downside. And as you can see, the risk reward is really, really interesting. You're taking, as of yesterday, less under 1% risk for about 9% to the downside, even if we're coming back into healthy retracement territory, back into this zone. So I think that this, IWM chart is particularly interesting, okay? Another chart which I think is particularly interesting, and we've talked about this, we've been stalking this for a long time. I'll try and post this up on the blog maybe tomorrow, is EEM, right? So emerging markets. So here you see we're in a big chop zone, big triangle, but we had a beautiful move all the way back up into these highs and a sharp failure, and we've got a very nice reaction. This was also like about 1.7 risk for about 7% reward here. Even if we're just going back into a little bit of a healthy retracement, if this is going to break down, this will be a very, very nice trade. But I also think that this is a particularly interesting chart, right? Along with, even stuff like if you're looking at the action on RSX, I'm not going to go through all of them because I suppose a bunch of you guys here prefer the FX, even though I think these charts are interesting to give you an idea of context where we're trading, right? And what the overriding themes are. Now, if you look at cable here, this hasn't changed for us. We've been short. I don't think that's a surprise for anybody. We've been short for a while, since all these, we've been shorting this quite aggressively, right? And we still feel the risk is to the downside. So the only thing I wanted to discuss here on cable is just, as we said last week, the 124 is not that interesting because it's been pierced so many times, and it looks like we still have a pocket of demand below, right, all the way into this 123. So as far as we're concerned, as long as this doesn't hold, we wouldn't be surprised to see some kind of bounces. We'd expect the bounces to be contained into the 124, 125, offering interesting sell opportunities, even though, it wouldn't surprise us to see some choppy action, some squeeze action. But again, because of the data, because of all the things that are happening, we still expect the downside to prevail. Keep an eye on the data. If the data is not good, this should clearly have a great chance of closing below the 123 mark. And if we close below that 123 mark from a day close basis, then we think that really opens up the room for us to move back down all the way into those 1950s, and then all the way into our primary targets, not our swing or not our trail, but our primary targets, which would be back down into the 116.80s. Okay, so we think this is particularly interesting. Now, I think a lot of people are getting caught off guard trying to play this dollar, trying to play the euro. I think all things being equal, if you're trying to neutralize, if you're trying to play a pure play on the dollar, I think the euro is a really tricky one to trade, okay? Now, it just looks like a lot of hedging flows are going through, waiting for this French election, et cetera, et cetera. Bottom line, what's going on? What's the underlying theme? So, you didn't hedge for Trump, right? You caught off guard. You're managing money. You caught off guard for Trump. On Trump, it's okay. It's the polls, right? You're managing money. You got caught off guard on Brexit. It's okay. It's the polls, et cetera, right? You managing money. You get caught off guard on the French election, on the Dutch election, then you're fired. You see what I mean? So right here, no matter how things shape up, we still expect people to want to hedge this. So you'll still see some wheeling and dealing. You'll see some negative flows going through on the euro, simply because people, especially, not retail traders, but people who are managing money, can't afford to get caught off guard. So no matter what they think, no matter what the technicals are doing, they can't afford to get caught off guard. So they're going to hedge that, right? So you'll see a number of flows going through because of that. Now, I think also because of the way, all these currencies, all these funding currencies are being used, if the equities sell off, euro is probably one of the most prone to squeezy action. So I'd be a little bit careful, right? I'd be a little bit careful. Here, nothing much has changed in terms of yen for us, right? Is bottom line is, if we keep on pricing in this March, and this March actually comes through, what we're looking at, is back into these 115s. That hasn't changed for a while for us here in 115.90s. And if equities start to sell off hard, and we see some risk off flows coming in, we'd be looking at the 108. So these are the bigger levels we're focused on the yen, Tam, but we don't think there's an awful lot of edge here to try and be positioned where we are here in terms of a broader picture, right? You can try to build something, but even intraday, these are, it's a tricky location. There's an awful lot of chop here. And unless we get a clearer picture on rates, or we get a clearer picture on what the equities do, this is likely going to continue to be fairly choppy, right, inside the range. Now, of course, it doesn't mean you don't have tradable opportunities on a shorter time frame. From a bigger picture, it's just a little bit choppy. I think the interesting action which is going on Aussie and Kiwi is that Kiwi's holding particularly heavy, and we've been looking to trade the short side. We've been looking for a breakdown here. We're looking for that move back into these moving averages, and also the RBNZ should continue to play on that. The difference on Aussie is that basically the data is really good, so it's looking like it's holding fairly bid. Now here, if you're going back, just a reminder, go back on a bigger time frame on Kiwi, right? This is a fairly aggressive failure here. Now, we are coming ahead into an awful lot of possible support here, but this is looking quite toppy, right? I don't think it's particularly clear, and I don't think it's particularly nice trade. I clearly would not be trying to get aggressively short here, right? But you have to be a little bit careful here. The difference on Aussie is that Aussie is holding a much nicer bid, right? So it is, gun to the head from a structural point of view, you can only get short. But from an intraday perspective, I think there are a lot of nice opportunities to play bounces here. This is a big resistance zone, but the more this level gets hit, the weaker it's going to get. But you see that there's nothing too interesting, because the stop placement on the shorts is fairly tricky, because you can get taken out on a tight stop and still hold all these highs. And to the downside, you do have a lot of support coming in. So I think it's just a boring phase in brackets, simply because the charts are especially from the bigger picture, they're at key locations, but the risk reward is not particularly interesting, right? So if anybody has a very specific comment on something, go ahead, we'll look at it. But I think there's nothing that is too interesting, right? The equity side seems to be a lot more interesting. So here I'd be very, very cautious going into today, right? And wait for US flows to come in to see how those things move. Now, in terms of just a little update, because we've been talking about these on and off. I don't like talking about trades too much, but just I'm flat on all those gold trades we discussed, right? We discussed swing longs from the end of last year, looking for, that seasonal pattern and that healthy retracement to come back in. We got all those moves, right? Whether you were looking at those initial longs, whether we talked about that aggressive long in here, right? We still had a fairly decent risk reward. We had about a 1.1% risk for a 3.3 reward. All those are done and dusted into this area. Now, it doesn't mean it can't squeeze higher, but those trades are done. So as far as I'm concerned, we're finished. You'll see those taken, all these trades, all these things taken off the charts. That's finished. It doesn't mean we're ready to get short. We think there's an awful lot of wheeling and dealing here. But that's just the way it is. And we're flat on all those, earlier this week, we're flat on all those bond longs from last year, okay? So fairly neutral book, some short exposure on equities and short exposure on GPB USD. That's pretty much where we stand. Is there any other chart, anything anybody wants to look at in detail here? I'm more than happy to hang around for another 5 minutes. Again, nothing's off the table, guys. Just shoot. Yeah, DXY, that's the big question here going into what's going on. Is it game off or not, right? Remember, we discussed this action on the daily. By the way, that's an awesome little name. I used to read those comics when I was much, much younger. I'm sure they're still going on. So what's going on here, right? So we discussed the fact that clearly the market was trying to hold here, and was this going to play out for that healthy retracement back into the line, right? And it looks like it's not. Now, we use this to try and highlight the action. We said we wouldn't be playing this fib. We would never be shorting this, right? Because this is a second test. So as far as the way we look at fibs, this is a lower odds 50 back short. So we would never short this, right? But this is just looking at the action. So right here, we're just getting a lot of funky action. So the question is, do you believe this is officially breaking and we're going to go back higher as we're going to raise rates? Most likely, this is just going to be a function of whether we get that hike in March, right? And that's the tricky thing here because, for all this could easily go rip or this could easily come back down. So the question is, as it looks like the FOMC is trying to talk this up, or do you want to fade into strength here? Not really, right? Do you want to buy it at these highs with a big chance of them disappointing? Not really, right? So as far as I'm concerned, what we'll be focusing on is possible failures at this 102, interesting level maybe to get short. If we come back down into these zones, we could see some kind of buying opportunities. But right here, there's just not, there's not an awful lot to do here, right? Not an awful lot for us to do here. And it's similar if you're looking at the action on Euro USD, right? Euro USD, we had that opposing fib, right? And you see what's happening. It's still very, very choppy. And every time we see some hedging flows, it's starting to look a little bit heavy. But would I be saying we're going to parity? Absolutely not, right? So I think here, again, I have a full disclosure. This morning, I got long Euro, right, for scalp. About, I think, in 37, something like that. And basically, I'm just very, very aggressive here, trying to see if I get a little scalp in the morning, get people caught off guard. But, I'm not going to be, I'm not married to the position here. But it's similar to this DXY. You've got an awful lot of overhead supply here. You've got what looks like market coming in a very big chop zone. So I have no problem being tactical, trying to play inside this area. But is the chart clear for a bigger move? Absolutely not. It's clear as mud, right? But again, any failures here, I think the risk is that we just go right back into those 0580s, and then we'll have to see a lot. We'll have to do on equities. So remember, if the equities start to roll, right, then don't be surprised to see this catching a squeeze. If they don't, well, pressure on, right? That's pretty much where we're what we're looking at, right? Yeah, DAX and Bund. DAX catching a little bit. Bund, what's the feed here on Bund? What's the best feed here on Bund? Do we have a good? Is this the best feed? Who knows? Is Anna in the room? Anna's our champion Bund trader. Is this it? Is this the best one? To have a full real-time live? Yeah. Okay. Cool. How's it going, Anna? So here, what's going on Bund? So a lot of people getting off guard. A lot of people, here it just looks like, it wants to go max pain. We came out, we clipped some very weak players, right? And I'm sure there's going to be a lot of people trying to get aggressively short here. Gun to my head, I would suspect it's going to try and cause some more pain to the upside. Intraday, I don't have a particular view here, right? I don't have a particular view here. It's a lot of, but as we're starting to see this election risk going, we'll have to see what's going on. But you see, it looks like it's trying to hold an upside rotation, right? You see, we're coming back down. It's catching a bid here. It's probably going to have to fill, and this will probably be the pivotal level for the rest of the day. I'm really not a huge fan of trading Bund here. I'll trade it at an extreme, but right here, I don't think there's anything too interesting to look at. If we let go 165.50s, then there's a good chance we'll try and come all the way back down into this area. But as long as we hold this here, don't be surprised if we try and clip this descending trend line, right? That's what it looks like. Looking at is to see some kind of a move, into those 166s, 166.50s, something like that. But apart from that, it's just not too interesting for me here, right? Hey, Tom, how's it going? Just not too interesting for me here. So that's pretty much what I would be looking at. What's the best feed for the DAX here, guys? Let's just do the DAX and then get cracking. Is this DAX performance, CFD, TVC? Is this the best one? Is this a good one? So here what you're seeing is you've got this gap up here, right? A lot of people are going to be focused on this. I still think those highs from the other day are going to be key. It's kind of like the equities across the board on the US side. And as long as it's holding above here, there's a good chance it's trying to clip those highs. So I'd much rather, if I had to short this, I'd much rather have get aggressive on the sell once we move back below here than trying to catch a top, trying to be aggressive here. This is one where I'd much rather wait for it to be back below here. I wouldn't mind being aggressive on some of the, on the RSX, EEM, IWM, some of those, but not so much here, okay? Guys, I hope that was useful. I gotta go, got positions to manage. Have an awesome one. Thank you so much for stopping by. Let's hope we have a great rest of the day. And, we'll try and do these every Wednesday or at least once a week, okay? Thank you so much for stopping by. Have an awesome one. Bye-bye, guys.